So for the current account, I would highlight two facts. One is that the current account deficit itself is not necessarily a bad thing, because it means that you're investing more than you're saving. And then you have to ask if you're saving too little. But Indonesia saves about 30% of GDP, which is actually a very kind of reasonable number.
Oh,
so
it's so fine for Indonesia.
Sorry?
It's so fine for Indonesia.
It's okay because you're investing, and when you're investing, you're building infrastructures, you're building factories, right? So if your current account deficit is based purely on consumption, or your exchange rate is too appreciated, then maybe it's not a good current account deficit, and you should be concerned about shrinking that current account deficit. But in the case of Indonesia in 2018-19, what we see is that a lot of the current account deficit is actually linked with import of parts and components and imports of capital goods, right? So in fact, now that we see the imports coming down, we also see the investment coming down. So we think that what is more important is how do you finance the current account deficit? And we like to look at what is called the basic balance, which is the current account deficit plus FDI. So if Indonesia can raise the FDI and finance the current account deficit, this kind of good quote-unquote current account deficit, which is investment-driven, and finance that with FDI, which is long-term flows, is not dependent on the mood of the market or what the Fed is doing or the Twitter, right? So the long-term flows of FDI as a stable financing for the current account is fine. But if I may make the second point, is that the kind of FDI that is most interesting for Indonesia, that creates good jobs for Indonesians, is also the kind of the export-oriented FDI.
Okay.
So if you start attracting the FDI in 2020, 2021, we've seen what happened with the washing machine story between China and Vietnam and Thailand, right? That when they imposed some tariff on washing machines from China, very quickly they started production in Vietnam and in Thailand, and then those countries started exporting very quickly. So actually, in 4 years, one could see already the impact of some of the relocation or some of the, you know, if, the impact of the reforms on the export side of Indonesia as well. So that, of course, will then reduce the current account deficit.
Okay.
Yeah. But the problem with Indonesia is the FDI comes here. Mostly they produce goods that's sold for Indonesian market, while the capital goods and the basic material imported. So it creates problem in our balance. So actually, don't you think that we need more FDI with export-oriented business?
Exactly. So the FDI needs to be export-oriented. I think that this is the kind of FDI that increases productivity, that creates the kind of middle-class jobs that pay good wages for Indonesians, and they actually impose some kind of competition to the economy, because they have to be producing at a level that is globally competitive, and that raises the game of all of the companies in Indonesia. So that should be the kind of the FDI that should be prioritized, is not so much the one that is just for attracting the domestic market, because that's here anyway, right? The big domestic market is a big attraction anyway. It's not only the one on resources, because the resources are here anyway, but the extra effort needs to go to really bring in the investments that will position Indonesia also in the global supply chains, so that Indonesia can sell electric cars into the global markets, or batteries, or electronics, or even apparel and footwear. Those are good industries that employ a lot of people, but it needs to be globally competitive and export-oriented.